Well, it was a stalling day on Wall Street today as we try to digest yesterday's positive news from the United States and Mexico's trade agreement, and then come to learn that Canada is in town and maybe at the table for a potential resolution to some disputes here in the United States as well. We did hit record highs on the S&P 500 and also on the NASDAQ composite, and we're within 2% or so of new highs on the Dow Jones and, of course, the Russell 2000. So on the whole, we still have very positive trends in place here. We'll take a look at what that means for our posture, and then we'll take a look at a trade application example from a sector that's been quite strong here recently. So let's go ahead and get started. Welcome to the Market Outlook video presented by MarketScholars.com. I'm your host, Brandon Van Zee. It's August 28th, 2018. For those of you that are new, first of all, welcome aboard. We're grateful to have you in our audience tonight. Remember, you can go to YouTube and subscribe to our YouTube channel. While you're there, in our description area, we do have a link that you can sign up for our email distribution list to be alerted of these emails along the way, which also entitles you to seeing which stocks are giving you bullish and bearish or overbought, oversold cluster signals on the S&P 500. In addition to YouTube, we're both heavy users of Twitter as well, so make sure you're following David and myself. My handle is @BrandonVanZee, and we certainly appreciate your guys' likes and retweets on these Market Outlook videos over there on Twitter as well. And then lastly, we're on Facebook. We do have a group established there. You can see the web address on the label in front of you. Feel free to jot that down and join our group on Facebook. All right, with that, let's go ahead and do some analysis on the markets here. As you can see, I've got the various indices here in the United States pulled up on our 4 grid. This is chart 4B. For those of you that are premium market scholars, remember you can always see what chart we're on by looking at that pink label in the upper left there. So this is a 4 grid that shows us 3 months worth of time for each of these key indices here in the United States. And remember, one of the features of this particular chart setup is that there will be this label that appears that's called yearly high today. It'll show up when we have lows as well. We just haven't experienced that for quite some time. So we do have that label showing up here on the S&P 500, letting us know that we are hitting a new 52-week high. In fact, this is all-time highs for the S&P 500. And that same label does appear down below here on the NASDAQ composite as well. So that's a strong sign. Obviously, if you want to be bullish in the market, you want full participation. Looking at something like the S&P 500, which does measure the 500 largest companies or thereabouts in the United States, is a good broad measure of that strength. And we've also seen that type of strength out of the value line composite and other equal weighted indices as well. So this is not only a market that's led by FANG, this is a market that is quite healthy and robust with participation from a lot of different areas. As you can see here, we did end up finishing flat on the day for the S&P 500. We were up only 0.03% at the end of the day, but in doing so, we did hit that all-time intraday high, and we can claim an all-time closing high as well, no matter how slight that was. And of course, that means we keep and retain our bullish posture using the market forecast indicator, which you can find on the Thinkorswim platform, and I do have it pulled up down below as well. Remember, anytime that green line is in the upper reversal zone, like it is right here for the S&P 500, that means we do have a bullish posture on it. Of course, you can easily see that by also looking at the background color of the charts. On this chart setup, if the background color is green, it means we have a bullish posture. So as you look at all 4 of the indices here, notice that all of them have that green background color, telling us that we have bullish postures across the board. In fact, we all have, all 4 of them also have green moving averages right now, which also tells us we have price above a rising moving average. So on the whole, those are positive attributes to this market if you want to be bullish. Now, some of you might not want to be bullish. Some people try to be perma bears and learn the hard way that that's a tough way to make a living. It is obviously appropriate to be bearish on occasion, and we'll certainly get that way here in these videos as well. But today, hitting all-time highs in the stock market is a reminder that the stock market has a natural ability to levitate higher. Remember, every single one of the 500 companies that's in the S&P 500 has built-in incentive to become more profitable, and if it's more profitable, it's probably more valuable in the stock market's eyes as well. So don't try too hard to fight the tape. Right now, the tape is very strong. If we take a look at our next chart setup here, let's take a look at chart 4C, and this is going to be our chart that looks at the 3 green arrow method that we use for trend trading purposes. 3 green arrows is just referring to 3 different technical indicators. The first technical indicator is a 30-day moving average on this particular chart, which is this green line that you see up here in the S&P 500, for instance. Then we also look at the MACD to get a sense of momentum. We also look at the stochastics down below to get a sense of whether the bulls or the bears are in control. And so when we have a green background color over the current candle, like we do with the S&P 500 right now on this chart setup 4C, it means we do have also 3 green arrows. So not only do we have a bullish posture using the market forecast, but we have 3 green arrows with those 3 other indicators as well. Again, confirming that this is a very strong market. And we do see that 3 green arrow condition appearing on all 4 of our major charts here today as well, despite flat conditions pretty much across the board here today. All right, let's take a peek here at our next chart. This next one will be a little bit different. It's still the same 3 major indices here in the United States, or sorry, the same 4 major indices, but rather than looking at 3 months worth of length, we're looking at 3 years worth of length, and every one of the candles that you see on these charts is 1 week in time as opposed to 1 day. This is chart 4D for those of you that are following along at home. What we're looking for here, this is called our 1040 crossover method chart. And what we're looking for are crossovers of the moving averages themselves. As you can see from the coding of the labels up at the top, the orange line will represent the 10-period exponential moving average, and the blue line will represent the 40-period exponential moving average. Since we're applying these to weekly candles, remember, for those of you that use it on daily candles, it's closer to a 50, 200-day moving average, sometimes referred to as a golden cross or death cross, depending on what cross of the moving average has occurred most recently. In the case of all 4 of our charts, there's nothing new to report. And remember, this isn't something that's going to change regularly. In fact, the last time we had any change whatsoever was over 2 years ago. And I think most of you would agree that had you just blindly gone into the market at the time that these orange lines crossed up and above the blue lines on all 4 of these charts, you would have been very happy as of today, as we're hitting new 52-week highs and all-time highs in many cases, and very close in the other cases. So just a reminder that you don't have to be overly active in the market. The stock market is an excellent wealth generation machine. Some people, psych themselves out. Some people are just not emotionally tapped into the right mindset to take advantage of those long-term trends, but they do exist. For those of you that are willing to go after them and take advantage of them, remember, your returns in the stock market are oftentimes much better than what you're going to see if you're just putting your money in a CD or a money market account in the bank, or even the bond market for that part. Keep in mind there's more risk as well, so there's always the other side of the coin. But from a long-term perspective, the stock market is an excellent place to be. And right now our bullish trends continue to exist from a long-term perspective. Let's now take a peek here at some 12 grid analysis. And this first one will be on the intermarket analysis. And when we're looking at the background colors of these 12 different charts that show up here, remember the background color meaning it's green means that it's a bullish posture using the market forecast indicator, and a pink background color means that it's bearish posture using the market forecast indicator. So as we look at this, one thing I would identify, first of all, a lot of you like to keep your tabs on the VIX. There's not a lot of things that we've been able to say about the VIX recently. It's just been very, very quiet. But the VIX was up 2.8% today, so just be aware of it. Keep in mind we're still at near historic lows, so I don't want to make too much of that. We're in a low volatility environment right now. Notice the 10-year Treasury yield was actually a standout performer today. Notice the TNX was up 1.26% today. You look at the size of that candle right there, it's one of the bigger ones on the board. It's not the biggest, but it is an outsized day for yields. And of course, the flip or the reverse side of that is looking at bonds directly in the chart below you with TLT is of course down. When TLT is down, TNX is up, and vice versa in most cases. So what we're looking at here is a day where yields are starting to kind of perk up a little bit more. One of the interesting things, we'll talk about it here in just a little bit when we get to the sectors, but I did notice a little bit of a diversion between utilities and real estate stocks today for some odd reason. Usually those two tend to go hand in hand, but remember, both of them are technically interest rate sensitive. And from a general perspective, what happens is when interest rates go up, like we saw here today, that should technically kind of help the financial stocks out there, your banks, your brokers, your insurance companies, but it should hurt your utilities and your REITs. So in the case of the utilities, that was the case. But for some reason today, the REITs actually had a very nice day. So we'll have to keep our eye on that situation to see if there's some sort of diversion that's taking place that is going to change our longer term mentality regarding that relationship, or if it's just kind of a one-day event. But as I look at the rest of these charts, the one thing I would say, speaking of the REITs, you can see the REITs in the form of VNQ over here having a nice upward trajectory from a charting perspective. The other chart that looks reasonably strong is junk bonds. Notice that junk bonds were continuing to go higher. They were actually just flat today, but the fact that they were flat on a day when U.S. government bonds were down significantly is maybe a little bit of a tell there. And remember, sometimes junk bonds can kind of dance to their own tune. Remember, junk bonds are much more tied into, especially like energy stocks and other kind of high risk type of corporations that are out there. And so when the economy is strong, sometimes you will find that junk bonds can hold up reasonably well, even if the interest rate environment goes against other types of bonds that are out there. One big story that we've been following all year is down here in the lower left-hand corner, and that's your U.S. dollar. Notice the U.S. dollar has struggled for the last 2 weeks. That's been a bit of a rarity. Most of the time in the past, when we've had, let's say, a week of pullback in the UUP, we found a bottom or we found a bounce. Well, it looked like that was going to happen here last week. Notice that we came down in price. And let me actually right-click on this chart and go to Maximize Sell. And that way you guys can see it in a little bit better detail here. But you'll notice that we had this pullback in UUP, came right down to this rising moving average, and then it bounced. So, you look at this day here, and then you compare it to all these other bounce days back here. You're thinking, okay, well, here we go again, off to the races to the upside. But something changed. We actually saw 3 days to the downside here. Today actually was flat, so I can't really call it a down day, but you can see that the trajectory or the trend continues to be to the downside over the last 3 days. So, keep that in the back of your mind. We now have a bearish posture on the US dollar, which is not something that we've seen all that much this year. And, some of the folks out there claim that the reason behind that is because we're getting some of these trade deals done in the United States. And so that may not be the best thing for a strong dollar policy. All right, let's go ahead and take a look at our next set of 12 grids here. This time, let's take a peek at chart, let's do foreign stock markets, chart 4F. And as we've got the 4F chart pulled up here, as a reminder, this is going to be our foreign stock markets. Things are really starting to perk up here a little bit better than they had in the past. There's been a couple of areas that have been stronger for a while, and that's been Israel, which is right down here at the bottom. This is EIS, is a ticker symbol to track that ETF. And then up above here at the top is India, EPI. I happened to notice, as a matter of fact, I tweeted out earlier today that Berkshire Hathaway is kind of taking a peek at a online payments company from India. So anyway, some interest there in India. And that's been a stronger area of the market, but a lot of the other areas have kind of struggled. Well, as we look at the makeup of this 12 grid, we now see more green background colors than pink, telling us that we see some firming up, I guess you could say, of the charts to the point where we actually have postures switching from bearish to bullish, even in some of those hard-hit foreign economies out there. Now, we don't want to get overly excited about it because the trends don't look good yet. But remember, if a stock is, or in this case an ETF, is ever going to have a good trend, it's got to stop, or it's going to start with some stabilization. It's got to stop going down before it can go up. So it's possible that what we're seeing here is that transitionary period where a lot of these once downtrending charts are now starting to stabilize and carve out a bottom in an effort to then rise going into the end of the fall and winter months. So we'll keep our eye on that, but it is a good, healthy sign for the market in general when we do see those foreign stocks doing a little bit better. And remember, part of that story is also what's happening with the US dollar. what I mentioned before. US dollar has been so strong in recent months and all of this year, really, up until the last couple of weeks, that it's been hard for any of the foreign stocks to hold a candle to the US-based ones. But if we do start entering into a period here where the US dollar gets weak and continues to weaken going further, we might start finding that the torch is passed to some of these foreign stock markets out there as well. All right, let's take a peek now at the US markets. This is our US sectors 12 grid. This is going to be chart 4G for those of you following along at home. And as we look at this, we can see it's mostly a positive sign here in the United States with the various sectors that are out there. Our only two exceptions are consumer staples and utilities. And if you had your way, those would be a couple of those sectors that you would want to be doing poorly on a relative basis. Now, I myself take issue with that because I'm a dividend investor, but for the health of the overall market, I'm willing to sacrifice them. And so it's just a reminder that the market likes cyclicality when it comes to sectors. And the more cyclical the sector is, the more it kind of measures the risk temperature of the market participants, and it just gives you a signal that animal spirits are alive and well, and people are willing to freely spend money on stock. So it's not necessarily the end of the world that the staples and the utilities are struggling to keep up with some of the other areas out there. So strong performance across the board, even some pretty good looking trends. You know, we talked about real estate already, so notice real estate up here today, a bit peculiar when you would have figured it would have been down, kind of following suit with utilities there from an interest rate perspective, but that's the way it goes. But you look at real estate, that's actually a really nice looking chart down there in the lower right-hand corner. We also see healthcare. Healthcare's chart is just as pretty to the upside. It's kind of a one-way machine right now. It looks a little different though. You know, with real estate, you've actually had opportunities to load up the boat as it's pulled back. Healthcare is hardly giving you any sort of a pullback opportunity. I mean, it's just been chugging right along there. So very impressive strength out of healthcare continuing. We do see strength out of the industrials as well. We were down a little bit on the industrials today, but we did break out to new 3-month highs yesterday. So good to see that. Discretionary continues to put in higher highs and higher lows. Technology, just when you thought you could leave them for dead, they come firing back, hitting new all-time highs as well. And then even the financials, quietly making a move. And that's been a welcome occurrence here, because a lot of folks have felt like the financials have been kind of one of the left out major areas of the market for a big swath of 2018. So on the whole, things still continue to look very, very strong for the bulls. The trends are intact. Now, one of the things that I did want to bring up here tonight, let me come on over here to the internet for this. Again, make sure you're following me on Twitter if you're on there, at Brandon Van Z. Certainly appreciate that. Remember, one of the things that I create on the weekends is the sector selector, which I currently have pinned. It'll probably be unpinned by the time you watch this, because then usually when I do the market Outlook video, I'll then pin that tweet to the top. But anyway, remember, you can look at the top half of the sector selector on Twitter if you weren't aware of that. And then I also create a bottom half of the sector selector as well. Now, I don't release that very regularly to the public. It is always available for premium members of Market Scholars, but every so often I'll share the bottom portion as well. Here is the bottom portion of that particular graphic that shows us a lot of different things. It shows us stocks that are hitting 52-week highs and also 52-week lows on the bottom. Gives us a sense of all the stocks hitting 52-week highs and 52-week lows. And you'll notice as of Friday night, that last week, we had 153 stocks within the 1,000 stock watch list that I use hitting 52-week highs. Now, that was the best showing since going all the way back here to the second week of June. And we only had 12 stocks within that list hitting 52-week lows. So that's a very strong sign of breadth there once again. And of course, we've got lots of other fun things on this chart as well, showing us 3 green arrows that are either fresh or stale, things that don't have 3 green arrows, strong industry, neutral industry, weak industry, stocks with growth characteristics, income characteristics, and value characteristics. So a lot of stuff going on here, but the reason I wanted to bring you over here is just to show you that the discretionary space right here remains one of the best from a 52-week high perspective. Lots and lots of names from the discretionary space. That continues to be one of those areas, those go-to areas of the market. And again, here's what the XLY chart looks like right here as well. So I wanted to talk about a stock here today that has had some news here recently. And let me pull up a chart first of all. For this, let's go ahead and use chart 4.0 because I kind of want to point something out. VF Corp is the name of the company. Now, for those of you that are dividend growth investors, you'll probably recognize this name because it is one of the 53 dividend aristocrat companies out there, meaning it's raised its dividends for more than 25 years in a row or more. For those of you that are not familiar with it, it is a big company, and it's the company behind Lee and Wrangler jeans. It's also the company behind the North Face and Vans and a couple of other apparel brand names that you might be aware of. Well, a couple of weeks ago, they came out with the news that they're going to split up the company, and they're going to kind of divide it up into a jeans-only company and then kind of outerwear. And from my understanding, that outerwear company is actually going to move to Denver to be near the Rocky Mountains, and of course, that's where you're going to use a lot of that North Face gear and some of that other stuff. So anyway, the point is, this is a company that has done extraordinarily well. This is a stock that we bought in my dividend classes over the years. And you can see that from, let's say, a 3-year perspective here. When we were buying it from a dividend perspective, it was down in this area that I'm kind of circling right back here. End of 2016, beginning of 2017 is when we were interested in it. That's when it had a 3% yield. Well, things have changed dramatically. This no longer has a 3% yield. If we were to look at it here on the trade tab, you'll notice its yield is only 1.97 right now, meaning that its price has gone up so much that its yield has gone down over 100 basis points. Not only that, but of course it's raised its dividends along the way as well, offsetting it even further. Well, one thing that I noticed after that announcement was made is that the stock really didn't respond all that favorably to this announcement that I'm sure management is hoping that would add value to the shareholders by kind of splitting it up in value creation opportunities. Because as I looked at kind of a 3-month chart here, you'll notice that this was the day right here that it did make that announcement. And that was a huge down day after investors kind of digested that news of splitting up the company. You'll notice down below, it was an ugly volume day as well. Above average volume, that's what that black arrow within the volume candle is telling us. It's 1.5 times the average volume. And when you look at the color of the candle right there, the volume candle, it's mostly in the red, telling us that our assumption is that there were more institutional sellers than buyers of the stock on that day. Not necessarily a great thing. Well, you will notice as this stock kind of pulled back, it did find support right in this area around 91. Well, it just so happens that that was the area of support going back several weeks as well. In fact, we had kind of this gap up effect that took place after they reported earnings, and the stock kind of formed a new level of support right around 91. It touched it right there on that day, kind of pulled back, retested that area right there on that candle, bounced from there, came back down and touched it again right there and right there, went on that run to new record all-time highs there before pulling back, and here we are again at 91. If that wasn't enough, it bounced for a couple days, pulled back. Where did it bounce? 91. So 91 certainly seems to me to be a very strong support area for the stock, kind of the floor where the buyers are willing to step in. You'll notice the last 3 days, this stock has done quite well. It's gone up. Today it was up over 1%, but for 3 days in a row, it's basically gone from 91 up here to 93.5. Now, one thing I will point out, some of you might also recognize this as being a potential head and shoulders pattern. I say potential because we wouldn't know until this thing starts breaking down beyond the neckline. But I just want to point that out because, you know, one man's trash is another man's treasure. None of these trades will ever be perfect. Some of you will say, well, geez, there's a bullish opportunity awaiting us as long as our stop loss or our kind of get out of jail card is somewhere below 91. Others would say, well, it's right back up here at this area where there was kind of a left shoulder being formed, and some of you might take a bearish trade on this if it starts rolling over from here. I think that would be a little bit premature, but you can at least start thinking about that in the back of your mind. So what we're going to do here for our trade application example for educational purposes and paper money is a bullish trade on this, where we're going to do what's known as a bull put spread, which is obviously a bullish strategy, but it doesn't require a huge move higher in order for us to be successful with the trade. The key with it is that we want to establish kind of our levels of break even below 91, since we do view that as such a key horizontal support area as the chart is currently set up. So let's see what's available to us as we come over here to the trade tab. I've got the September contracts pulled up. These are the monthly contracts with 24 days until expiration. As I look over here towards the various puts that are available on the strike chain, I'm going to drift my attention down here to 91. After all, that's where I see the line in the sand where the bulls appear to want to kind of protect this stock at the current time. So I'm going to right click on the 91, which happens to be the 28 delta as it stands right now, and I'm going to sell a vertical. Now when I sell a vertical on the Thinkorswim platform, it's always going to automatically pull up the next strike that's available unless you choose deep and wide. So remember to come down here and change this if you want to, because I typically don't do 50-cent increments, just choose up a little bit too much in terms of commission. So usually at a minimum I'm going to do a $1 wide. So I'm going to sell the 91, I'm going to buy the 90. You'll notice we would receive a 24-cent credit in order to implement that trade. Remember, if you wanted to figure out your return on risk, it's as simple as clicking confirm and send once, and then getting your calculator out, taking the max profit, we're just doing one contract here, so it's only 24 bucks, divided by max loss, which is 76 bucks, as you can see over there, and that's going to be a 31.5% return on risk. Generally speaking, we're shooting for anything over a 30% return on risk, so this one does get us by from that perspective. Also keep in mind, it shows you what your break even is right there, $90.76. So if you believe that when you look at this chart, it stays above $90.76 throughout the next month into the September expiration, then potentially this could be a trade that is of interest to you. Obviously, it does have the support of a lot of those retail and apparel names that have been doing quite a bit better here recently within the consumer discretionary sector. So I'm going to go ahead and place this trade, just simply clicking confirm and send here, reviewing it one last time. Everything looks fine, so I'm going to go ahead and send that off. All right, well, I want to thank you for joining me here tonight. Again, a quiet day on Wall Street. Not a whole lot going on, especially when you look at prices, mostly flat across the board. But it is a reminder that we are still hitting new all-time highs on many of the major indices out there. We still have bullish postures across the board as well. So for the most part, this is kind of an all systems go type of a market until we hear otherwise, right? There's always news events that can affect the market at any given moment. But as of right now, it looks like we have a strong market, so we want to participate on that on the bull side of the equation. So with that, I want to thank you for joining me here tonight. Best of success with your trades and your investments. Goodbye for now.